Hello and welcome to the Crypto Jungle. My name is Baloo the Bear, and here on the channel I keep crypto simple. This is a realistic, no hype channel, so if you find yourself struggling to control your emotions in the crypto space, then consider subscribing. I want to talk about Bitcoin, I want to talk about futures, I want to talk about open interest, and I want to talk about bullish and bearish outcomes. So let's just not dawdle. Let's jump right into it and start with the king of all crypto, and that is Bitcoin. So I'm actually going to start out on the weekly. This is coming as old news for some, but we have a new all-time high close on the weekly candle chart. So this is the highest weekly close of Bitcoin ever. This is a very bullish thing. I want to start off the stream saying that I think we're in a bull market. I think it's, the bullish price action is very evident that it's leaning in the higher end probability of continuation, and things are looking very healthy. The rallies are looking very healthy. We're seeing a lot of bullish follow through, bullish continuation. I think everything's looking really, really good in that regard. We can even take a look at the monthly chart, just a solid, obscene monthly candle. So we're going to need to close above 58.9 on the monthly, which is in about 2 weeks. So not too long. A lot can happen in 2 weeks inside of crypto, but I would be speculating that this candle would be closing at a higher level and not a lower level. But yeah, let's get back into the daily. Let's talk about some of the macro things here. Let's first just address the structure. The structure is looking really good. We have an extension, retracement to test the previous accumulation range, reaccumulation after decline, and we have been breaking out very strong momentum, very strong rally, trying to go and test the all-time high. So the all-time high test has still yet to happen. I think there's a high probability that we do test the all-time high. But the thing to consider at this point is open interest, for those who don't know, just means the amount of futures contracts, the amount of options contracts, the amount of leverage that's in the system is increasing. And typically, when the leverage increases, the vulnerability for these types of reactions increases. So you can get these liquidation events to the downside, liquidation events to the downside, as people are forced to sell their positions, as we have a trickle-down effect of margin calls happening and liquidations. So I do want you to consider that and maybe even anticipate that, because I think that it's going to be a really good opportunity. Now, the thing to consider here is I don't know when it's going to happen. I just know that leverage is in the system, and I know that typically leverage gets flushed out. So when leverage gets flushed out, you get those moves down, but the context of that is yet to be determined. We may come up and test the all-time high. We may break past the all-time high and then get a deleveraging of the ecosystem from that point. There is no way to tell where it occurs. You just need to know that it's present, and it is the fuel for liquidations, which give you those, these types of large downside candle moves that just seem really quick and really irrational. Those come from the futures markets as people get their margin calls and are forced to liquidate assets. If it did occur here, I would be looking down in this general area. So anywhere from $53,000 to $50,000 would be somewhere that I would be looking for a retrace. But again, we are in a very bullish posture. We just continue to make higher highs and higher lows, so we can't dwell too much on the bearish. Just know that there is going to be at some point a deleveraging event as we move forwards here. Let's drop down to the 4 hour and see what we can see on the 4 hour. So just taken to the upside, higher highs, higher lows. Anytime we dip down, there are buyers present. Now we're currently in this area right here, struggling to get above. If we take a look right here, let's just draw this a little bit of a upwards channel here. Okay, now this is also coming in the context of some bearish divergence. Now this is on the 4 hour, so we don't need to freak out, but there's also a bullish divergence. So for those who are struggling with divergences, basically when the lows are in disagreement, it's bullish. When the highs are in are in disagreement, it is bearish. Now, when both are in disagreement, basically you have a channel, and you just need to observe where we resolve from there. So if the RSI breaks bullish out of here, that will be correlated with a bullish break of here, where we would definitely be at least testing the all-time high, maybe even higher levels. And if we break below the squeeze, then of course that would come in the context of breaking through this channel and potentially coming down to test some of the lower levels. So I think, you know, if I was to pick a side, I do think that we're going to continue this bullish trend and continue for at least a test of the $65,000 level, which is 64,887 on my chart. And then we need to, you know, be prepared for some of the potential as people choke up their stop losses. It doesn't take much to trigger this kind of chain reaction of liquidations. It happens every single time. So I'm prepared. How do I position myself? I'm heavily positioned in the spot markets. I have some shorter term leverage trades that I have been de-risking. I had some call options that I've been holding for a few months, so I've been taking some of that risk off of the table just to kind of capture what I have underneath a macro resistance of the all-time high. And in the event that we do get some sort of liquidation event where the market is panicking, I'll be well ready. I'll be well ready to scoop up some altcoin positions and some BTC positions. I'll be full bull. We're looking really good. I'm quite happy to see the structure. I'm quite happy to see a lot of the commitments and confirmations coming into the market right now. So it's just a matter of being able to endure the volatility. Now, those who are new to this market, or at least weren't around in the bear market or weren't around in the previous cycle, even better, you probably are not really prepared for the volatility that is ahead. Now, volatility, people hear that and they think, oh, gains. No, volatility means it's very easy to get shaken out of your positions. Moving forwards, I'm not gonna have a lot of leverage. I'm not going to have a lot of leverage at all. I'm going to have spot positions, and to be quite frank, and you know, this is not financial advice, but a lot of those spot positions are not even going to have a stop loss on them because the volatility is going to be so extreme, so quick, that I do not want to get shaken out of those positions. So that's how I plan to strategize in the event that we do get this bullish continuation that I'm speculating is ready to occur. So let's take a look at what total market cap has had a breakout. There is potential for a test of the all-time high break, but we do not have to test. We can just keep ticking on to the upside, maintaining this channel that we started back in the COVID shakeout. From the top of the rally to the bottom, we have this channel. We'll see how we progress to the end of the year. I do personally think that, you know, if I was to pick a time, which time is very hard to quantify, I do think that the timing of this bull market will conclude at the end of the year. Not a popular opinion, just what I think. I'm just some dude on the internet. It doesn't really matter what I think, but you know, price action will tell us a lot. If we start going parabolic into the end of the year, I would anticipate that there would be a little bit of a retracement. Whether that is a multi-year bear market, I don't know, but I do think that there will at least be a reshuffling of the portfolios as end of year comes, tax season, tax liability, and all of those things come into consideration at the end of the year. All right, let's catch up with the chat here. Hello, Kahuna. Hello. Matt McAllister, what's up? Tammy, hello. Blake, your lives are amazing. The hype is real. I try not to be too hypey. Got to kind of toe the line with YouTube, though. Good morning, Tom from Melbourne. Usagi Nami. Bird, bear to you. Hello, Blue the BTC bull. Yep, bullish when I need to. Hey bro, what's going on? Mr. JFK, we shall prepare for the next long squeeze. Yeah, so a long squeeze, yeah, exactly. Kind of those liquidation events, long squeeze, whatever you want to call it. Again, I am prepared. Meaning my portfolio is structured bullish. I'm removing leverage so that I don't, you know, get any of those liquidations and don't have any of my stops or anything that's tight parameters for success. I've kind of limited, and I've moved heavier into the spot markets because the next leg should be very volatile. And when it's very volatile, I mean, it's really easy to get shaken out of positions, and getting shaken out of positions is not what I want moving forwards. Bitcoin's looking good. It's looking good on Bitcoin here. Too bad it's not a spot ETF. Yeah, so that's the other thing to consider as well, is the buy the rumor, sell the news event that could unfold here as, the futures ETF has just been approved and I think is now launched, active. I think it was being launched on Monday. So it should be, I should know this, but I don't trade the futures. I just pay attention to the events themselves. We do have to be on the lookout for a buy the rumor, sell the news event, which would correlate with some sort of, unwinding of the futures markets. But yeah, the physically settled Bitcoin, I think, will become a top signal personally. Because everybody thinks that is impossible, and usually the impossible, the sure thing, is where you get the sure thing is where things kind of surprise you. Morning from Portugal. Hello, Chris. I am moving to Portugal in May 2022. We'll have to grab a pint. PlayStation 5, how long have you been living in Indonesia? Not too long. I've been here since July, end of June, early July. What is your spot entries? You mean what assets? So everybody wants to know what the YouTubers or what people on Twitch are holding. Going forwards, you should hold what you think are good projects. You should hold what you think are fundamentally sound projects that drive demand. There are plenty of them out there. What's important is to find assets that you think are high quality projects, meaning that they have adoption, they have the network effect taking place, and that the users are forced to buy them. So a classic example of that is Ethereum. In order for you to do Ethereum transactions, in order for you to interact with Ethereum smart contracts, guess what you need? You need Ethereum. The same is for Solana. You need Solana to pay for gas to interact on these platforms. Cosmos is the same. Cardano is the same. All of these ones that require the underlying asset to process transactions are going to be really good bets. So any of the smart contract platforms are going to be good. You're going to watch the price action. You're going to watch the consolidation and any break of the consolidation. So an example, we can actually go take a look at Solana. The point I'm trying to make here is what I'm holding doesn't matter. I'm holding the assets that I have taken positions in as the price structure has given me signals to become a participant. So let's say you wanted to become a participant in Solana. Basically go to the daily chart, and as soon as you get candles that begin to close above the structure here, that begin to close above this line of resistance, that's a buy signal. That's your signal to start scaling in if you aren't already scaling in inside of the accumulation zone itself. So that's what's more important. It's not important as to who's holding what. It has to do with where are the signals on the charts and what assets are you going to be convicted in holding. Because if you don't really understand something, you may not sell it at the right time. You may buy too much, whatever the case may be. It's more about doing your own research and becoming convicted to the assets that you're holding. Become convicted to those trades. I hold assets for a bunch of reasons. I hold them for demand. I hold them for hype. I'm looking to get into Shiba Inu. Garbage shitcoin, hate it, useless project, will trade to zero, but the market thinks it's a good coin. So, I'll be a participant in that as well. That's kind of, think about the reasons why. Oh, what's the average price that I entered in BTC? Well, I would say the average price is probably 11 to 12,000. So, most of my BTC, it's kind of the currency that I'm in here to accumulate. So I'll trade altcoins to increase those holdings, as well as trade altcoins to make my life better with, in real life achievements like pay off your house, pay down a mortgage, whatever you're trying to do, pay off your loan, your student debt, whatever the case may be. When you have those opportunities to make your life better, you know, life-changing money, take those opportunities. And in the meantime, I'm also stacking sats as well. Are you going to Portugal for tax reasons? Because it's being crypto, because it's crypto friendly there. I'm going there to check it out initially. So I've actually never been to Europe, period. You know, I've done a fair amount of traveling, but I've never been to Europe. So I'm gonna go check out Portugal, see what the vibe is. I am interested to learn about the culture because I do have an intention of living there for the crypto-friendly tax policies. Me being a Canadian, it's very similar to the US. The tax policies are kind of aggressive. They don't really jive with the lifestyle of somebody who's a digital nomad, whereas I'm taxed globally everywhere I go as a Canadian, same with Americans. So if there's ever an opportunity for me in the future to relinquish myself of that tax burden, then I'm going to be looking at those options. So yeah, Portugal is definitely a place that I want to go to check out, but it's not, you know, nothing's firmed up just yet. Did you accumulate any on the last drop to 28 to 30K? So I did buy Bitcoin on its way down to 30, but I was buying at 38. So, well, you know, I just had it in my head. It's like, oh, this is a stink bid. Now that bid was not stinky enough because we kept going down. But yes, I did buy some on that at 38, but it was a fraction of my overall holdings. Too bad it's not a spot ETF. When you say spot markets, do you mean alts as well? Yes, altcoins are for spot markets, man. This whole market is really over marketed to using leverage. You know, altcoins are already leverage. If you want, you know, an increase of, you know, percentage gains, then you can apply some small amounts of leverage to Bitcoin to get it to emulate what's going on with an altcoin. But moving forwards, trust me when I say you do not need leverage, and leverage will likely get you into a situation where you're either liquidated or not. You would have been better off just holding spot. Trust me, you know, this is a very predatory market. There's a lot of people who are marketing these tools and instruments as the only way to do things. And it's simply not true. The spot markets are the place to be, especially when the bull market is in full force, because it is a bucking bull that will shake you out of positions, if not liquidate you. Liquidate you and then take off. Do I think Cardano is in a reaccumulation period? So Cardano's chart is actually not the nicest, but what is nice is that the whole market is looking poised for a continuation. So it could be in an accumulation at this point right here, but it got pretty overmarked, overvalued. I have my own thesis on Cardano. This is a hype coin in my opinion. This is not a long-term hodl because they just don't have the development that other chains do. These are just the facts in the network adoption and the facts in the dApps. So this one did get quite overvalued. There's a ton of hype in Cardano. It's already experienced an incredible amount of markup already. The structure is not looking fantastic. We do need to hold above this level at around, we'll call it $2. You know, $1 was a nice even psychological level that held as good market support for a very long time. I would assume that $2 would do the same, but it's, you know, we keep making lower lows or lower highs. So we need to start breaking some of that structure. That will come with a move out of this box. So if we can break out some of these highs, get above, then we can talk about continuation. If the bull market's on, that will happen. Just because the technicals look short-term bearish doesn't mean that the market as a whole can influence the price action of an asset. So, you know, right now I don't like the structure at all. I don't find it's something that entices me to want to trade it. But like I said, you know, if the market goes full bull, this will run along just the same. Crown was warning breakout traders. Yeah, I think, you know, typically breakouts are really good trades, you know, especially if you're in the spot markets, because it's a confirmation of a new high. You've got a confirmation of a new level. But there's a lot of open interest. There's a lot of leverage in the system right now, and you need to kind of wash that out. It is what it is. Ever since futures kind of made their way into cryptocurrency, you have these kind of liquidation events. Now they're very good buying opportunities. As the market's panicking and you have cash, just go into the spot markets and start buying. It's one of the best, like, it's a double-edged sword. You get these meltdowns that scare the crap out of everybody and usually result in some sort of accumulation to take place, but you also get the market undervaluing the assets. So when you get an opportunity to buy the asset as it's undervalued, boop, springs back up to market value, and then we accumulate at market value before getting overbought again. So I'm prepared for that, whatever level it occurs at. Do I believe in the super cycle theory? So yes, I do. Now, the important thing to take into consideration with any of those theories where the model breaks is the first thing that has to happen is the model has to break. Don't front run bullish ideas. Don't front run bearish ideas. You have to wait for confirmation. So as far as I'm concerned, nothing has changed. Nothing has changed. Not a damn thing has changed. And you have to maintain that mindset until the market proves to you otherwise. You can't speculate and say we're just beginning a super cycle, because you're going to find yourself getting emotionally attached to that outcome, and you're not going to sell when you need to sell. I am going to have the assumption that if we confirm a higher high on the monthly on Bitcoin, that we're going to have maybe 2 more months of bullish price action. Anything beyond that, anything that, you know, throws above the channel, let's say we get a throw over of the channel here, you know, let's say we rally really hard and get a throw over of the channel, consolidate and break out. Well, now the models are breaking. And when the models start to break, now you need to consider, well, nobody knows where this is going. So, you know, it's not off the table as a possibility, but the probabilities are that that doesn't happen. And I have to maintain with the data that we have. I have to maintain with that bias that we currently have. So as it stands right now, yes, you know, a super cycle could happen, but until it does happen, it's not happening. What do you think about using 2 to 3x leverage so you can have a tiny bit of higher size? So if we're talking about Bitcoin, if you buy Bitcoin 3x on a dip, you've got a pretty good position there. But you really need to be able to prove yourself in the spot market. If you're new to trading, if you're new to crypto, you're like a few months in or a few years in, realistically, you're a newbie for at least like 5 or 6 years. You need to get from front to back of a market cycle, full and complete, all the emotions that go along with a full market cycle before you can even consider yourself not a noob. If you're falling under that category of a noob, then you need to prove yourself in the spot markets. If you can't make it in the spot markets, you're just throwing fuel on a fire. You know, leverage is just adding more, and it's the same excuse for everybody. My account's too small. Everybody says the exact same thing. My account's too small. I need leverage so that I can make these big swings. I need leverage so I can do that. Blah, 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 blah. If you just stick to the spot markets, trade smart, your account won't be small anymore. If you whittle your account away with leverage, it will always be small. So the excuse, I need to assume more risk, I need to take on more risk because my account is small, there's a lot of data to prove to the contrary. And it's important for you to realize that your emotions and your decision making when it comes to risk as a newer investor inside of cryptocurrency, typically speaking, is the incorrect. There's no data to support your theory. And that's not meant to be rude at all. I'm just trying to be realistic. There's no data to support the claims that you need to take on more risk, because there is countless data and countless cases where not using those financial instruments actually did make you a lot of money. For example, you know, if you bought $1,000 worth of Luna at the beginning of the cycle, you'd be sitting on 50 grand. So, you know, you don't need a lot of money. Stick to the spot markets. DYDX ready to explode soon? Yeah, I mean, it's a possibility. I'm not a big fan of governance tokens that don't have any utility. I like governance tokens when they have utility. If there's some sort of reason to have the underlying asset, then I like it. But when it's just a governance token where you can use the protocol without quit drawing lines, without buying the token, like at no point do you need this token to use DYDX. At no point, you know, there's no point. You can stake it so that you can receive more of this token that doesn't do anything, but as it stands right now, there's no point to hold the token. So all you're doing is buying an asset with the intent of selling it to somebody else who wants to buy it at a higher price. Not that there's anything wrong with that. Look at the NFT market. The NFT market, that's all it is. There's really not a ton of fundamentals going into the NFTs outside of gaming and maybe some, you know, private Discord groups and stuff like that. But, you know, there needs to be demand. There needs to be intrinsic value. There's intrinsic value to Bitcoin. There's intrinsic value to Ethereum. There's intrinsic value to Polygon. All of these, you know, layer twos and side chains that require you to have the underlying asset to process transactions. But in the case of DYDX, in the case of Aave, in the case of Uniswap, at no point is the retail investor forced to buy this to use the product. So just keep that into consideration. Hype will drive this one. Right now it's in a downtrend. My bias is that trend will continue until it doesn't. So right now it's got to start breaking up, and it just looks like a choppy mess. Heading down. Let's take a look at very oversold condition. That's because it got pretty overbought. I would honestly expect it to come back down and test down in this generalized range right here before I start getting too excited on it. So there's definitely more room to the downside on this one. Now the bull market can kick into full force. You can also find some support back here as it did test this area. So if this area holds and the bull market gives, you know, a bullish conclusion to the upside, then sure, you know, we got a case that can be made here. But if this fails to hold, I'd be looking anywhere down to even 15, maybe even 10, 14, $10. Yeah, it's not my favorite setup, that's for sure. But the problem with my brain is that I'm putting all that effort for tiny rewards. As Crown said, if you have a winning trade, it's always too low, and when you have a losing trade, it's always too much position size. Sushi is better than Uni in my opinion. Yes, much better. It's got a, if you do any interactions with these automated market makers and you haven't used Sushi, let's say you're a Uniswap user. Most people are. If you're using an automated market maker on Ethereum, you're probably familiar with Uniswap. Go try Sushi. It's got like 11 different blockchains. It shows you the gas limits right there. If you're on Polygon, it's got limit orders, although I think those are paused right now. It's a much better product. And with all of their incentive models for the fees and other stuff coming down the pipe, the demand for you to actually buy Sushi and swap it in their staking protocol, minting X Sushi, which is their yield bearing asset, it's just a far better product that actually drives demand. Uniswap, not even close, just a governance token. So Senpai, you know, that's going to happen. You're going to have winners that are sized appropriately. You're going to have winners that are sized inappropriately. But adding leverage to that, you know, you can add leverage to your losers that are already losing a lot. You're wanting to add leverage to the ones that are winners, but you need to, you've told me right now that you're having struggle with trading. So the solution to you having success in trading is not add fuel to the fire, not add risk to an overly risky environment. This is crypto. You know where leverage exists in other markets? It exists in Forex. It exists in like indexes and stuff. The fact that we have spot leverage offerings on crypto is fucking nuts. Like that's just, it's nuts, okay? Don't be too greedy, be patient, be smart. You know, it's, trust me, you can make money in the spot markets. Jake from State Farm. Not crypto, but could you take a look at Hexo Corp on the TSX? Hexocorp. Hexocorp. All right, let's go to the daily here. So it looks like it's wanting to come in for some sort of double bottom formation. We got quite a sell-off here. We've held support down in this general area that was the original change of character on this Wyckoff range here. So we're coming down to the floor here. I don't know what the demand is going to be on this one, but as far as a floor, this is going to be the higher probability. Now I would wait for this to begin to form some support and prove this support a little bit more, and maybe even begin to break to the upside a little bit before becoming a participant. Or if you know something on the fundamental side that you think is more noteworthy than just some guy on a stream taking a look at it with no comprehension of what it does, you might even just campaign into this position, you know, DCA in this generalized area. Very oversold. Yeah, don't know what it does. Don't know what it does. Let's take a look at what our indicator says. Our custom alphanumerics indicator. Bearish cross on the weekly. It's going to take a while before that cross is back bullish. Yeah, I mean, it's got a lot of sell pressure. It's going to take some time. It's not mooning anytime soon, that's for sure. It's going to take some time. What's the best way to learn how to spot trade? Well, we can teach you in the group. So if you're wanting to join VIP and you don't have an FTX account yet, we can get you in for free for a month. So if you are interested in signing up for VIP, join the links down below and we can teach you how to trade. But I will also add that trading is a journey. Okay, it's a profession. It's like anything. There's a big difference between being a trader and being an investor. If your goal is to do this for a living, then there are a few things you need to consider. First thing is time. It's going to take you years to learn. No joke, not going to sugarcoat it. It's going to take you years to learn how to do it effectively and consistently be on the winning side. Secondly, you're going to have to pay for your education one way or another. Whether you pay a mentor or whether you pay the market, you're going to pay somebody. It's either going to be through loss, or it's going to be through education, or it's going to be through a combination of the two. But get it through your head that while you're spending the years learning, you're also going to be spending those years taking losses and spending money on education. So if you're just showing up now, if you're just showing up to crypto now, I would just advise you to do some fundamental research on demand. Understand why people need to hold the token, not just what YouTube is telling you to buy. Go in, take a look at some of the higher market cap coins and see what is driving the people to buy this token, and then buy and hold. Because I do, not financial advice, but I do feel that we have a lot of bullish indicators that are pointing us into the direction of a continuation of the bull market for at least a few months. So if that is the case, you can be the recipient of some pretty good gains. Realize where you are in the market cycle. We're at the later end of the market cycle. The next best opportunity to buy is going to happen in a few years when everybody tells you it's a bad idea. Don't leave the market. Don't leave the market. You can stop trading the market, but don't leave the market, because people make money in bull markets, but they get rich in bear markets. That's just how it is. That's the difference between smart money and dumb money. Dumb money shows up when you're late to the party, when most of the gains have been made. Smart money buys in the bear market when nobody cares and they wait for those gains to come. That's the pure essence of the Wyckoff method, which is what we teach. Links below. Yeah, so new cipher. No clue why it went off. But I mean, how do you become a participant in that? How do you buy that? I don't know how you can buy that. You can't. So you need to wait for some sort of consolidation. Huge candle. Look at this wick. Oops, I keep using my pen tool. Stop it with the pen. This wick. If you bought the top of that wick, you're down. You're down 60% if you bought the top of that wick. My condolences to all those who bought the top of New Cipher. You're gonna wait for it to consolidate. Oh, this is on the weekly. So you're gonna wait for this to consolidate, let it kind of show some sort of bull flag. There's a lot of selling pressure here, ton of selling pressure. This is way overheated. This was obviously either some YouTuber pumping it or some sort of bullshit news story. You have to wait for this to cool off considerably before I would even touch that. First time chat from Branzam. Stack of sushi is good. Stack of sushis is good on Sushi Swap. I'm not sure I understand. Stack of sushis is good on Sushi Swap. You can buy sushi on Sushi Swap, and I like Sushi Swap. Exchange. Not touching that shitcoin, just curious why it moved. Illiquidity. You know, when you're in a market, like YouTubers at this point have the ability to move markets. So if there's just a really thin order book, if there's just a very, very thin order book on New Cipher, and let's say BitBoy Crypto goes and tells you New Cipher is the next best thing, it's gonna just blow through the order book. And when it blows through the order book, you get these parabolic rises that have these large corrections back down. It's just a marker of illiquidity. It's a shitcoin. It's a shitcoin with weak order books. During the bear market, are you buying to hold or actively trading? So there are several stages of the bear market, all of which come with different strategies attached to them. So in the downtrend in the bearish trend of the bear market, you're shorting. You're shorting mostly Bitcoin, maybe some Ethereum, but you're really not touching altcoins. I know it's tempting to short the altcoins, but it's just too unpredictable to short the altcoin. So basically every time we rally, as soon as you get a bearish divergence or some sort of bearish indicator or just a weakening of the rallies, you short it and you bring it down. You short it and you bring it down. You short it until you bring it down. And then you get to a capitulation event. Now this will be honestly kind of hard to short. You won't be able to time the capitulation too well in terms of a short contract. You don't want to hold these things too long, but this will be a signal, okay? And the capitulation event will be where you buy. And if you are in the group and you have our custom indicator, if you're on the weekly, you would have gotten the buy signal on this one pretty strong buy signal. So here on the weekly chart with the alphanumerics indicator, which comes free with your membership, you got the buy signal right there. You got the green diamond on the weekly. That is the best buy you can get. You would have scooped up Bitcoin back in the day at $165. It did it again. See how it does it at the very bottom of the bear market? So we have a bearish trend, boom, tip top bottom of the bear market, green diamond flash, you buy, boom, again after the $20,000 top, tip, like the absolute bottom of the bear market, you got to buy. So you'd be buying Bitcoin at around $3,200. It had a quick rebound. So realistically, let's say you got it at $36,000 or $4,000. But yeah, so if you guys want to get hooked up with this indicator, it's free with your membership. Sign up with the links below. If you already have an FTX account, I do offer a discount on your first month. So use the coupon code WELCOME and we can get you up to speed and bull run ready, because the next one's going to be wild. And I think a lot of the YouTubers are going to get it. A lot of people kind of in the wrong mindset. Honestly, like the biggest message, and this is free. This is a free message that I'm saying a lot in the group right now. You don't need leverage. If we move forward into something like this, you do not need leverage. If you take leverage, you're going to have a bad time. You're going to miss huge opportunities. I'm telling you, like I'm already scaling out of leverage. I'm removing it from the system. The only coin that I'm going to have any sort of margin on is Bitcoin. And that's because, the gains just are less. If you're in altcoins, which most of the people who enter these markets are, you do not need it. You do not need it. Trust me. Hello, Patty. Good morning. Checking out the S&P. Oh, it's a little spider. Yeah, we can take a look at the S&P. You're going to take the futures, you said? Yeah, we'll just do that. So, this is a hard chart, man. Like, numbers just go up. You should have bought the dip down to the 30 on the alphanumerics indicator. Would have gotten you, just buy these dips. It's looking like it wants to turn around. It's holding above the 7 on the weekly. Yeah, I mean, if it don't put on too much leverage on this. But yeah, it looks like it's ready to trend to the upside. I think we had a little bit of a shakeout. Now, if this doesn't make a new high, then this will be a lower high, and we can have a move down to the 50. So take that into consideration. Trail your stop. You know how to mitigate risk. But yeah, this is just artificial. It just keeps on pumping. Keeps on pumping. It's giving all the rich people time to move assets. Oh, you're in the group, MJ. Well, have you gone through the material? Have you looked at all the videos? I mean, it's the same. We teach it all. Spot markets, leverage. It doesn't really matter. The spot, all of the setups in VIP, they're with the intent that you're going to be taking it in the spot markets. When you add leverage, that's an extra layer that you're deciding to take. So, the setups, the theory, the TA, it doesn't matter if you're using leverage or not. Yeah. Hexo is one of Canada's largest cannabis companies. I think the cannabis sector is it got overvalued, but it's a valuable sector. So that's actually not a bad one. It's actually not a bad one because is it an ETF though? I would probably trade the ETF in that one because it's just too hard to pick a winner. Unless you're going to make your own basket of weed stocks, stick to the ETFs because then you're just spreading your risk out. You're getting more exposure broadly, and you can trade one asset. You don't need to do a ton of TA and keep track of everything. I would go with the ETF. Was it an ETF? Oh, it's one of the largest cannabis companies. You could take a swing at it, but I would also trade the ETF. Yeah, MJ, contact me in the Discord. If you're struggling to find the content, I know Discord can be confusing, especially for newer users. I'm not saying that that's you, but let us know and we'll point you in the right direction. Do I think Tezos will affect Matic's price action? So Tezos, I think, there's going to be a ton of narratives that are built around all of this. Tezos is an interesting project, but man, is that a hard coin to try and hold on to. That is just a nuts coin. First of all, if you've been holding Tezos for years, just hodling spot markets, watching it go up and down, rally 300%, retrace 80%, I gotta hand it to you. You got some diamond hands. You are the definition of diamond hands. So kudos to anybody out there who is holding Tezos, because that's a hell of a wild ride. Yeah, I mean, it's trending in the right direction. Do I think it's going to have an effect on the narratives being built around Matic? No, not necessarily. A lot of the dApps are integrating with Polygon, so there's a lot more use case in the current environment for Polygon than there is for Tezos. Tezos is building a lot in the background. They're kind of creating a different ecosystem. They've got a new, it's not new, but they've got an NFT marketplace. They've got all the hallmarks of success. But the attention, for whatever reason, we just have to listen to the market participants. The attention doesn't seem to be on Tezos, and there's just far more market attention towards the price action of Matic, Polygon. That's just the choice of the market participants. We can't really speculate on too much onto why that is, but I do know that a lot of the really popular decentralized applications like Aave, SushiSwap, a lot of the highly used blockchain applications are integrating well into Polygon. I can't say that that's the same for Tezos, but again, they're kind of building their own thing. They might be building a better product. Now, can they launch a better product in time for the bull market conclusion? I don't know, but there's definitely a lot more market attention and hype towards our narrative to flip. Cardano's looking juicy at lower levels. Yeah. Is any time a good time to start stacking BTC, or you just wait for the bear market? If you're a long-term holder, if you're thinking like, you know, this sector is somewhere where I want exposure, there's a high likelihood that if you're buying Bitcoin at 62,000 during the bear market, it's going to go below your entry. Okay, so there's going to be two things that happens with that. I think that, you know, we're going to see some price appreciation to some pretty impressive levels. You can't really say what those levels will be. It all has to be in the context of what the candles look like. But I think we're going to see some pretty impressive levels. And then you're going to watch those levels go down, and if you're not taking profits, you might even watch your the asset go below your entry, and now you're down. So it's really hard to watch it go up and then down, especially if you're thinking really long term. So the biggest moves you can make in this market do happen in the bear market. They happen in capitulation, the bottom of the bear market, when people give up and you get just an out of nowhere capitulation event to the downside. Everyone gets unwound and it just becomes severely undervalued. Those are the best times. You want to buy when the market is missing something. You want to buy when the market participants are making a mistake. Right now, the market participants aren't making a mistake in marking up the price of Bitcoin. So where it retraces to, that mistake of the market is yet to be determined. So I would say, you know, you can make money, but you should also think about taking profits and planning. These markets are cyclical. There's always a bear market, you know, there's always a bear market. How to take profits? What do you want to do in your life? That's the most common answer that I give to people. Everybody, when they ask that question, more often than not, what they're asking me is, how do I know when the top is here? And the answer is, you don't, and you'll never know when the top is in. What you do know is what your life is like. You know what your life is like. You know your financial goals. You know how having life-changing amounts of money can help you form your life to make it more sustainable, whether it's paying off student loans, whether it's paying off credit cards, whether it's putting a down payment on a house, or hell, even paying off a house. What is your life like? That's how you need to think about taking profits. Don't take profits being like, what technical indicator shows me the tippity top of the market? We work on structure, and that comes after the top is in. So if there's money on the table that can change your life, I would just say take it. Okay, ETH BTC, yeah. Roswell making sure he's stacking sats, really important now. It's getting a little messy, but I think we could probably come back down and test the 0.05 BTC per ETH area again before getting a full-on move to the upside. You can kind of see this head and shoulders, this inverse head and shoulders formation that's occurring right now. So, you know, the trend is nice. We're making higher highs and higher lows. That's what we want to see. We've overthrown on the megaphone pattern, but I think we could probably come back down and test. We don't have to. A breakout past 0.08 will be a really big signal that Ethereum is ready to go. But yeah, you know, we've got our inverse head and shoulders pattern playing out, and things moving forwards on this chart. Where it plays down to, it looks like maybe we could come down to the 50. We have some confluence there on the 50, which is right there again at that 0.05 BTC per Ethereum. Okay, I'm completely in BTC at the moment. I have 2x leverage with a short also in case we have a black swan event. Does this sound reasonably safe at this point? As long as those trades are bracketed, meaning that you have, you know, a stop loss on your short so that you're not eating up your profits. More so on the short side. I don't think, you know, you make your own decisions on the long side. But yeah, I mean, it's very hard to predict a black swan. It's pretty much impossible from a TA point of view to be able to get in on a black swan, but you know, having that protection on that position is fine. You can have your 2x long with a little bit of volatility short on this as well. It sounds reasonable. It sounds reasonable. You just I just hope you have a plan for, you know, when you're going to relinquish that short, because if we do get some further confirmations, you're just going to be eating your profits. Thoughts on FTX token? Well, I'm a big fan of FTX. There are staking incentives for the FTT token. I think as more users are onboarded onto FTX exchange, there's going to be more of a demand. There's intrinsic value of that token as it offers discounts. So I think it's fundamentally a strong coin. Any exchange coin is going to be a strong coin for the most part. How's my neck? It's doing better. I had a chiropractic adjustment, which really hurt yesterday, but it's getting better. Okay, we'll take a look at VRA, which is kind of part of the Binance shitcoin ecosystem. So right there, I'm not a big fan, but we'll take a look, and then that'll be the last chart. That'll be the last chart. So it's mooning. I don't know. It's breaking out. Become a participant. Hodl it. I don't know. There's really, you know, it's just heading to the upside, man. Got a bullish cross on our indicator. Keeps making higher highs and higher lows. Become a participant. It's trending in the right direction. That's it. Yeah, not much to say on that. Okay. Oh, and to finish up your question, there's Spam Yam. During the bear market, are you buying to hold or actively trading? There will be actively trading occurring on BTC, and then when I feel that we've hit the bottom and we start, you know, that Wyckoff accumulation range, spot buys on a ledger, leave them alone, campaign into your position, diversified portfolio, and alts buying on bloody days, only bloody days, because you basically got, you know, 2 years of drama in the markets to be campaigning into these positions. There's always going to be bloody days in the market, so you just reserve capital. All right, so thank you all for joining in to the stream here. If you're new here, don't forget to follow or subscribe if you're on YouTube. And yeah, if you like this content, leave it a like, subscribe if you want to, and leave a comment down below for any projects that you want me to take a look at. And until next time, please trade safe. It is a jungle out there. Peace.